Stocks closing sharply lower today after Fitch Ratings warns that U.S. banks face a serious risk if Europe's debt crisis spreads. Ellen Braitman has the details from the New York Stock Exchange. Ellen.
Hey, Pimm, we were down most of the day, but really the losses you're talking about took place late in the trading session. At the close, the Dow was off 1.6%. 29 of 30 stocks in the average were lower. S&P down 1.7%. All 10 broad industry groups trading down. Financials and technology leading the way. The Nasdaq there also losing 1.7%. All of this after, as you said, the credit rating agency Fitch came out saying U.S. banks, their credit ratings are at risk if the Eurozone debt crisis is not resolved in a timely and orderly manner. Fitch saying the current outlook is stable and banks' fundamentals have improved, but that risks of a negative shock are rising. All of this on a day Bloomberg had a real interesting story talking about how hard it is to really calculate, based on the information that's not being disclosed from banks, what that total exposure is to Europe. Another drag on stocks today, oil prices were up 2.4%, reaching almost $102 a barrel. It's a 5-month high, and of course, higher oil acting like a tax on consumers and businesses. Oil prices up 34% since early last month. Energy stocks as a group, they were higher at one point today, but even that group ended lower. Chevron, Exxon, ConocoPhillips, and Schlumberger all leading the declines. Investors brushing off what would typically be positive for stocks. The Fed saying industrial production was up 0.7% in October, more than expected, giving more evidence the U.S. is really weathering this debt crisis. And Pimm, we even had the National Association of Home Builders Wells Fargo Confidence Index rising to the highest since May 2010. So the outlook there from the contractors, the construction guys, may be stabilizing. But the home builders, they were higher, 10 of 12 of them, including D.R. Horton and Lennar, gaining. But again, not enough to counter the concerns about Europe.
Now, Ellen, there seems that there was some speculation about possible Federal Reserve action that moved the market during the trading session. Give us the details.
Yeah, that's right. The head of the Federal Reserve of Boston saying that that's a possibility, that the Fed may have to act with the European Central Bank. So certainly that was one thing that took us off the lows, in fact, turned stocks into positive briefly. But then that happened, came out with a Fitch report, and we had that turnaround. Also, just want to point out Rambus, a stock that lost 61% today. It lost an almost $4 billion jury trial over allegations Micron Technology and Hynix Semiconductor colluded to manipulate prices of DRAM chips. And Pimm, for those of us who know this trial, this case has gone on for many years today. Seems like there's some resolution. Rambus saying it's going to look into its options for appeal. Back over to you.
Thank you very much. Ellen Braitman reporting from the New York Stock Exchange.